Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trade setup and the market strategies for the day. Now, if you remember, as of yesterday, we did close in the red. This was after the market faced a whole host of volatility, and of course, there was a global weakness that we actually were seeing as weighing down on the Indian stock market sentiment as well. Despite that, we did see a tad bit of recovery towards the end of the session, but despite that, we saw the Nifty close about 200 points lower or 0.8% lower in trade. And we also did see that, the Sensex also fell by about 644 odd points or 0.8% lower again in trade. Now, of course, rising US bond yields, passage of the tax bill weighed on the global sentiments. US markets also did see a 3-day of a decline as the 30-year Treasury yield touched a high of 5.16%. So the Wall Street was struggling to regain confidence following the sharp sell-off of the US Treasury bonds that rattled the markets amid growing fiscal concerns and the debt concerns at large as well. So, of course, in the final part of the trading session, S&P 500 declined slightly by less than 0.1%, making it the third consecutive day of losses, the longest losing streak since April that we have seen for S&P 500. Meanwhile, Nasdaq 100 rose modestly by 0.2%, and the Dow Jones Industrial Average also did close by just a minor point as well. So it was a mixed closing action as far as the US markets are concerned. Asian markets did start off on a tepid note on Friday. Of course, again, taking cues from the global markets, especially the US, but they have recovered a tad bit in the last half an hour in trade. So we are now given to understand that the GIFT Nifty is also indicating to a slightly muted and a positive start. 24,694 is what we are given to understand. So Hang Seng, Nikkei, Kospi, they've all improved in trade, even the Chinese index as well. As far as the foreign flows are concerned, the FIIs continued to net sell in the Indian equity markets yesterday, 5,045 odd crore rupees. So again, a sharp quantum hike that we saw after a day of buying. Now, DIIs, however, bought in the Indian equity markets 3,715 odd crore rupees in the equities this day. In fact, for the FIIs trend this week, it's been very erratic. Monday, there was a net sell of 525 crores. Tuesday, there was a net sell of 10,000 crores. Wednesday, there was a net buy of 2,200 crores. And then again, a net sell of 5,000 odd crore rupees on Thursday again. So that's something that we will also focus on with our guests to help us decipher what do we make of this. Let's also look at some of the stocks that you should be watching out for. Earnings focus, you're going to be looking at FMCG major, ITC, mixed bag there. Cigarette volumes growth as expected 4%, but FMCG revenue growth only about 3.7%. Margins also came in under pressure, so it's a mixed bag kind of an earning that has come in. For Sun Pharma, we've actually seen US sales and the global specialty sales lower than estimated, but the commentary is also very cautious. On its net profit basis, we've seen a fall of 19% in fourth quarter. The company has posted 2,154 odd crore rupees of profits this time. We're also looking at some other numbers, including Honasa Consumer, a revenue uptick of 13%, but the PAT has dropped by about 18%. Margins are down by 200 basis points, but from the last 3 quarters odd, there is some sign of an improvement that is coming in on that front. From the other earnings that are coming in, Premier Explosives that operates in the defense sector is going to be important to watch. Sharp fall in its Q4 profit, which dropped by 44.5% this time. And revenue also fell by 14.6%. So we'll see how the stock reacts to that one. Concor also posted a decline of about 2% in its March quarter profit. The net profit here stood at 298 odd crore rupees as well, as compared to 303 crores in the same period last year. So those are some of the numbers that we are watching out for. Of course, there are many other important ones which we will speak of along the way. Remember, we are also looking at some of the stocks that will react to the Sensex changes that are effective June 23rd. So Nestle India and IndusInd Bank will be out as part of this adjustment, and Trent and BEL will be included in. So look at Trent and BEL as for the reaction on the positive side today. Let's also look at what else will be important domestically. The RBI board meet, which will review central bank's FY25 balance sheet and decide on the surplus or the dividend payout to the government, will also be very important to watch out for as well. So that's something that you could definitely keep an eye out on. Brokerage houses have also come out with their reports, so we'll keep an eye out on that as well. But meanwhile, let's welcome our guest on board. We are now joined by a very special guest, Mr. Mayuresh Joshi is joining in, Head of Equity Research, William O'Neill India. He'll be joining in shortly. And we'll be looking at how he is really looking at the stocks in this aspect. But I'll just quickly talk about some of the brokerage houses updates that are coming in. So we are looking at ITC. Goldman Sachs here has come out with a report, a buy call here with a target price at 490 rupees per share. Also, we are looking at what they are mentioning as the Q4 FY25 comparable EBITDA grew by 2.5% year on year. They're talking about how cigarette business delivering is steady growth. Cigarette margins have declined, however, due to high tobacco and cost inflation as well. Although they're talking about FMCG margins that have been impacted by inflation in the palm as well. Although they believe it's poised to improve as palm oil prices have now come down sharply. On the paper business, they believe that it continues to face extreme cost pressure and it's likely to take a few quarters to really ease out. HSBC, on the other hand, is looking at a buy call on that front with a target price of 510 rupees per share. The cigarette volumes have delivered a stable 6% year-on-year revenue growth also, driven by the volumes that they have seen. Q4 they believe is in line with their estimates. Sequential improvement in FMCG business margins, although growth is still subdued. They believe also like ITC, they appreciate the stock because of there is attractive valuation and a stable tax backdrop. On the back of this, they are betting big on ITC. On Sun Pharma, we have a Citi report which has come out with the most bullish target of 2,220 on Sun Pharma, a buy rating there. They believe the company's mid-high single-digit revenue growth for FY26 estimated reflects regulatory and geopolitical uncertainties are already in. Now, guidance of $100 million has been launched related to investments on several other products that they are looking at. And they also believe the company is going to go full throttle to build its specialty franchise going forward from here. That's another one that you should watch out for. From the brokerage houses aspect, you can also look at TCS. That's where Macquarie has come out with its report. It believes there is an outperform rating that they have given here with a target price of 4,640. They also think that it has still a good headroom to improve utilization by at least 500 basis points. They implying about 100 basis points of EBITDA margin improvement is possible, and of course utilization that can improve only with the revenue growth is what they are saying. Let's now welcome Mr. Mayuresh Joshi, who's now with us on the program. Warm welcome to you, Mayuresh. Good morning to you, and thank you so much for taking the time out. Before getting into the stock specifics and the earnings, straight away talk to you about what's happening globally in the US with respect to bond yields and the debt concerns, the bill that's been passed as well. So how are you looking at all of these aspects? Because that's been the key concern for global markets over the last 3 to 4 sessions.
I think these concerns might actually persist over the next few weeks because unless we receive clarity in terms of what the Senate is going to pass in the US in terms of the expected tax cuts, does that add to the overall deficit numbers, which are already elevated? And therefore, I think what happens to the interest rate payments thereafter, I think the bond yields are indicating all this. And it's not just the US bonds, actually. You look at the 30-year in the UK, where inflation is again rearing its ugly head, which is very, very sticky as we speak, or the Japanese 30-year as well, where the Japanese yen carry trade is probably rearing its head again. So I think these global macro uncertainties are probably going to persist, which means unless we receive clarity on all these counts, including what probably happens in terms of the tariff resolutions by the end of June, I think you might just have some element of uncertainty as far as global macros, global growth, inflation, and the interest rate cycle is concerned, which is appropriately getting reflected through bond yields. And that might create some element of volatility in the risk-on markets like equities across the globe as well.
Right. So, Mayuresh, what does that do to the flows? We have been seeing, a sharp sell-off again coming in from the FIs. At least 2 days in this week is what we have seen, a quantum of 5,000 and 10,000 odd crore rupee on a single day kind of a sell-off happening. This comes in after a large part of May has actually seen FIs pumping in money in the Indian market. So how do the flows really carry on from here looking at this scenario?
So I think they will calibrate according to what the move is, right, Sakshi? So I think if the bond yields are moving higher across the globe, I think there is a tendency in terms of parking some element of money towards safer assets. And the kind of move that Indian markets had witnessed over the last few weeks, I think there is some element of resilience in terms of profit booking being done by these FIs stroke FPIs and trying to hedge a part of their position, looking at how the global macros are pointing out, at least at this juncture, to probably safeguard a part of their asset portfolio as well. But in the larger context and the longer context, again, I think if you look at global macros and map it with how the Indian macros are shaping up, I think crude is lower, which creates a huge element of positive impact as far as our current and trade account deficit is concerned. And again, a lot of industries that are consuming crude, the input costs actually go significantly lower. Again, it's been offset in terms of the rupee dollar depreciation to a certain extent, but still it will be lower compared to what it was a few quarters back. At the same time, the expectations in terms of how our internals are probably expected to map out, specifically in terms of consumption expected to pick up because of tax cuts, better monsoons, both urban and rural. Second half corporate earnings are expected to show some element of resilience and comeback, which remains circumspect in large parts of the globe as well. Yeah. And if that probably happens, I think the expectations in terms of our internal consumption, tax collection, the fiscal roadmap, the government capex, which is expected to continue, and the liquidity support by the RBI might actually tantamount that India's macros and micros might actually be better compared to the rest of the globe, in spite of the global volatility that we might see. At some point of time, which I've been time and again mentioning, I think FIIs, FPIs will be compelled to look at India. The current scenario, as it warrants, I think it is a hedge strategy that they're probably deploying. And as I said, global volatility might persist, which probably is irking them to probably park some money from risk assets like equities into safer haven assets like this.
Absolutely. So, Maharish, in the Indian context, then, do you think these global uncertainties are, for a long period of time, going to put a lid on the upside that we were expecting on the markets recovery front? Yesterday, again, we tested 24,500 on the downside, looking at these uncertainties. So, do you think even if we are not going to be drastically falling because we don't have anything to worry about, at least in the interim, but the upside is going to be capped?
That's a base possibility, Sakshi, and therefore I think the markets might stay in a range. Now it's very difficult to define whether it will be a few weeks or a couple of months. But again, I think as June will probably conclude, I think a lot of clarity will probably emerge. What it will also coincide is that we'll also start getting Q1 numbers, which should also start creating a base effect for the market. So in my own sense, I think the next few weeks. It might be a range-bound trade with upside probably capped as a base case scenario, but no structural downside as well for the Indian markets. And as clarity emerges, I think we might actually be one of the markets that can emerge and re-emerge faster in terms of recovery compared to the rest of the world.
Absolutely. We have the pre-open tick at least starting lower at this point in time. 1% of a cut is what we're looking at, 24,300 and thereabouts at this point in time. But hopefully this should improve for the better. 24,395 right now, 200 points of a cut on the Nifty at this point in time. But you were showing, ITC and Sun Pharma correctly. Those are the two big numbers that we are watching out for, and we'll come to both of them for a reaction on the results from Mayuresh as well. 2% higher in the pre-open trade for ITC at 434, and for Sun Pharma, although there is a dip of about 2%. Let's start off with Sun Pharma first. We have seen a mixed bag of sorts here. Exceptional loss there. We have seen the guidance is also slightly muted at this point in time. Although we have seen a revenue uptake, EBITDA also improving by 22%, margins coming in higher at 28.7%, but the profits are down with that exceptional loss weighing on, the bottom line at this point in time. Globally, again, we have to really see, how things really shape up. They've been a lot of talk about drug prices easing, etc. So all of those factors will also be important to watch. How would you look at Sun Pharma post earnings?
Well, I think it was a decent set, in my opinion. And again, I think one must really analyze this from the lens that what kind of a specialty pipeline do these leadership pharma stocks possess? And therefore, I think stocks like the Sun, I'm just naming a few, right? Sun, Brokerage, Cipla, Lupin, have got that specialty pipeline which they have developed over a periodicity of time. And therefore, I think as they pass through those stage 2, stage 3 clinical trial clearances, these specialty drugs will give them the revenue visibility over the next few quarters and years. That will probably replace the existing Revlimid component that has been dominating a large part of the pharma universe as well. At the same time, I think the large part of the pool that has got created in phase 3 trials, I think as they come close to fruition, at some point of time, I think the revenue exclusivity and the exclusivity in terms of margin performance can be relative drivers in terms of overall earnings growth. Yes, there have been FDA concerns in the past, but if they are resolved, I think that probably creates an added tailwind to these stocks as well. And a large part of the R&D has largely got gestated in terms of their margins as well. So I think lots of positives to look at rather than negative.
Okay, let's move on to the other big number then from the FMCG pack, ITC. That's come out with the numbers. Revenue uptick of 9.4%. Cigarette volumes, as per estimates, largely on the street. EBITDA up 2.5%. Margins at 34.7%, slightly easing down, although. But the net profit from continued operations up by about 0.8% or so. There has to be seen also the other aspects, like paper business continues to face some headwinds. FMCG business is looking at the input costs continuing to be high, but could probably lower down with the palm oil prices reducing from here on. How would you assess ITC as a whole?
So in line with estimates. So I think it is probably one number which the street probably pegged to come in a little bit positive across business segments. And it is in line with estimates. Again, I think as you rightly pointed out, I think for a few of their segments like FMCG, the expectations in terms of consumption coming back largely in the second half might be a base case scenario. Cigarette business, obviously, I think the demand inelasticity obviously continues. And therefore, I think the margin performance might actually continue to be better. At the same time, I think the expectations in terms of how the paper business will move and the other ancillary businesses as well, including agri trading, with expectations of better monsoons, the agri part of the business should also hold up. Paper might be some weak link, but again, I think it's not too much of an impact as far as EBIT is concerned. So yeah, I think decent set of numbers and in line with estimates.
Okay, fair point. So that's as far as how ITC is concerned. Would you be comfortable to buy at these levels, or are you going to be really holding up at this point in time, Irish, on ITC?
No, I think it's a hold from our side. I think the rating rankings are fine. They've also got a good dividend yield, so let's not forget that as well. But again, let's not forget that a large part of ITC's current business model suggests that a large part of their cash flows are going to get reinvested into newer products and platforms that they're probably creating, which might just dampen their ROCs to a certain extent. So to that extent, I think let's see how the involvement happens probably in terms of the capital deployed and what kind of they probably make.
Okay, got that. Let's also talk about, we'll get to some of the other stocks which have been in focus because of the earnings. But defense names, Mayuresh, how have you been looking at them from the last week? Also, there has been a substantial amount of uptake across the board. So I just wanted to ask you, how are you really looking at them afresh? HAL, BEL for that matter, substantial high, momentum there. Even for GREC for that matter, it's been leading the shipbuilder space with the kind of momentum that's getting generated. Cochin Mascon. We've discussed all this space quite a lot, but important to really look at it on an everyday basis, because the last time around the rally unfolded, we were looking at it every day, and suddenly the stocks got into a sharp downtick and a consolidation for a long haul. So important to guide our viewers again in this second run of the rally that we're looking at here. How would you advise?
I think a large part of the stocks have got significant tailwinds, and as we see it in markets with India, I think a large part of those stocks also are above key pivot levels, which means that you shouldn't be aggressively entering into these stocks, into these spaces. Obviously, the tailwinds are huge. Kudos to the Indian Army in terms of Operation Sindoor and what we've achieved in terms of Atmanirbhar. The kind of weaponry that we probably displayed during Operation Sindoor, I think it has opened eyelids across the globe, and therefore, I think not just India, where the where the orders might come through. The export market, where Europe is probably looking at a lot of defense equipment to procure, I think our guys might actually gear up in terms of both quality aspects, cost aspects, and in terms of time deliverable aspects as well, which creates a huge impact. Indian defense exports have jumped tenfold in the last 10 years. And with all that has evolved in the last few days, last few weeks, I think export might become a huge chunk with better margins for these businesses as well. So I think a few of the businesses, as I said, above pivot levels, valuations a little bit elevated, and therefore anybody holding should hold on. Execution is a key risk, but I think these companies are now gearing up in terms of time delivery models as well, both internal as well as export orders, which will probably come through, which means they will expand capacities if needed in a brownfield fashion without creating too much impact in terms of the current manufacturing process that they probably have. And therefore, I think these stocks might actually continue their momentum. But from a fresh buy perspective, in my own sense, I think one must really wait for the stocks to settle down a tad bit so that you get better entry points and better valuations as well.
Absolutely. We're again seeing some green across the board, be it retail, BEL today, or the shipbuilders at this point in time, BTL, all of them are showing us some green ticks. So we'll keep an eye out on the entire space yet again today. And you already have, Mauritius, the entire view on the sector there. Let's also look at some of the earnings that came in from the cement pack, Mayuresh. Grasim posted its numbers as well as Ramco Cements as well. Now for Grasim, again, what we've seen is that the revenue improved 32%. EBITDA, however, came down by 58%. Margins were down. Net loss came in at 288 crores. Although this was a much lesser, narrower loss than the last year, same quarter of 441 odd crore rupees. There's been an also exceptional loss that the company has posted. Whereas when we look at Ramco Cements, that's something that we should also look at from the cement basket. Revenue down 10%, EBITDA down 23%. Margins again came lower at 13.3%. Net profit substantially down 78%, despite the exceptional gain. Your sense of how are you approaching some of the cement names and what happens with large caps like Grasim?
So for the space as a whole, I think there are positive tailwinds that are coming through. This quarter, specifically Q1, I think you should see a significant bump up. What had happened last year because of irregular monsoons, because of elections, a lot of activity had remained subdued and dampened. But this time around, I think the volume pickup should be decent enough. As we head into the second half, with expectations of government capex, both in terms of urban rural housing, which is a large part of cement offtake, as well as infrastructure, which again contributes decently in terms of volume growth, along with the consolidation that we've probably seen in the industry as a whole over the last few quarters, makes us believe that volume growth should be decent enough. With consolidation, pricing should remain steadfast. And because of that, the operating leverage getting created as input costs remain stable, a lot of integration that has happened specifically in terms of their power capabilities with captive waste heat power or you've probably got a lot of IRRs that are probably getting deployed as far as power and fuel consumption is concerned. Crude oil prices remaining lower, reducing the logistic costs as well, and expected to remain so. Might actually tend us make us believe that reported EBITDA per ton should be significantly better over the next two fiscals. So as a space remains attractively poised for India's infra story. And therefore, I think names like an Ultratech, names like a JK Cement is something that we continue holding in our global portfolios.
Okay. Let's also focus on Trent and BAL with the view that, they will be included in the Sensex starting June 23rd, replacing IndusInd Bank and Nestle. What is your fresh approach on Trent? Again, we have seen the stock recover quite a bit from its lows and again is hovering higher. And of course, BL has its own tailwind with respect to defense that you marked out for us. But inclusions in Sensex, does that change anything?
So sentimentally positive, you're seeing the uptick in pre-open. But largely, I think this is one very interesting space, actually. So whether it's Trend, whether it's V-Mart Retail, Vishal Mega Mart, again, if you're riding the consumption boom, and specifically in tier 3, tier 4 cities with the combination of all the factors that I just mentioned in my opening remarks, I think this is one space where I think the growth can be substantial in the second half because a large part of their portfolio for Trend, Zudio, less than 1,000 rupees. For V-Mart Retail, a large part of their average selling price is around 500, 600 odd rupees. Similarly for Vishal Mega Mart, which is a little bit of a different model. But at least the apparel part of the business is where if the uptick starts coming through in terms of both savings and discretionary activity actually improving, I think part of the market is something from the consumer discretionary space along with footwear that can actually start doing well. So I'll keep my eyes peeled open for a lot of stocks within this business.
Since we're talking about consumption space, D2C, we're looking at also Hunasa Consumer from the personal care aspect that's come out with the numbers. Metro Brands is there that's come out with the numbers as well. Now, for both these from last 3 or 4 quarters, it was rather lagging. Are there any signs of improvement here? Do you look at them afresh or do you still believe there's a long way to go before you would probably be interested in a Hunasa?
So I think it's going to be a bottom up, Sakshi. I think when you're talking consumption, I think not everything in consumption is going to do well, right? So when we go through periodicity of pain, you might have read this. So there is a lipstick index as well, which is a key that a lot of analysts probably monitor as well. So how global events are playing out, whether urban consumption is really going to come back roaring, are all aspects to be seen. And therefore, I think it's going to be an absolute bottom-up approach when your question comes.
Okay. One stock which is standing out on the results reaction today is, clearly Power Mech projects with the kind of results that have come in. I think that there's an indication of about what 13-14% of an uptick in the pre-open. Revenue uptick of 42%, margins although at 11.6%, but the profit up by 38%, and that's what is probably leading to the momentum. Any suggestion here on Power Mech projects? Have you studied this deeply?
Yeah, I think very interesting story, and I've mentioned it, I think, a few times
Yeah,
on our.
once I think, yeah,
Mm.
yeah.
And our take is that the core business is expected to do very, very well. The expectations in terms of the order book on hand is
Yes,
quite significant. There will be a steady state uptick in margins. So margins will show a steady state uptick. And again, I think this is one of the companies where the FGD part, which I had mentioned when I was discussing Pharma and this space, including the likes of
yes.
scale as well, where there's a huge market opportunity. You need to, before March 27, March 26, I think that might get extended by a year. All the thermal plants which are polluting sulfur dioxide into the system, it's a 1.25 lakh crore market at this juncture, and very, very few players, as I said, with very good margins as well. And therefore, I think this is one space which can incrementally add. They're already starting getting orders. They can incrementally add to whatever benefits from an earnings and a bottom line perspective can come through. This is
So
one
buy
strong.
at 3,300 too?
ये 11% uptick के बाद नहीं, but ये बढ़िया story.
Yes. Absolutely. Let's look at the markets. They've started to tick higher at this point in time. And we're looking at Nifty Bank at this point in time. Let's also pull up all the other sectors to see how the stock is moving up in this trade. Let's pull up today's move 24,660, about 0.2% higher in trade is what we have as far as the Nifty is concerned. For the Nifty Bank, we have about a 0.25% higher tick. That's also on the positive side that we see at this point. Let's pull up the advanced decline ratio. IT stocks also ticking higher in trade. Let's also pull up, as far as the auto stocks are concerned, let's pull up the Nifty advances to the declines at this point in time to see how the stocks are moving up. But looks like it's we have a fair share of green in trade today. But I think it's the broader markets that are lagging today. Small caps are down by about 0.25%. So that's something that's really not contributing. 1139 advances to 426 declines is what we have at this point in time. So the breadth is towards the positive side for sure. But let's see whether this continues. Mid caps absolutely flat with a positive by 0.06% higher. But the small caps down by about 0.25% is what we have at this point in time. Look at the two big numbers, ITC and Sun Pharma, that we have been talking about. ITC from the FMCG, cigarette, paper space as well. And we will also look at how Sun Pharma from the pharma pack, the biggest number there that we are looking at. ITC up by 1.2%, 431 at the current levels. Let's also look at Sun Pharma that's declined by 4% after the earnings, 1646. So a sharp reaction on the downside. But trend clearly that we discussed right before the markets opened, up by about 1.5% is the top mover right now. But Hunasa also, we were discussing this 9% higher post earnings. That's a substantial move. So finally, things started to move, and the earnings are reflecting in the stock price there. Power Mech projects we've already discussed, 11% higher in trade at this point in time. You can see Trent is the top mover on the Nifty today as far as the reaction to the Sensex inclusion is concerned at this point in time. We are waiting for our guest Kunal V. Barar, Vice President Technical Research of Choice Broking, to be with us to help us understand his first take on the market opening. Kunal is with us. Hi Kunal, good morning to you. How are you looking at the markets open today, and what's the strategy? Two stocks that come into your mind?
Well, yes, good morning to you all. Right now, Nifty trading at 24,630, trading at flat level. Yesterday, we witnessed some, healthy correction in the counter. And if Nifty sustained below this 24,600, then further downside would be there up to the level of 24,300 to 24,000. And if you talk about upper side resistance, and right now resistance comes at 25,000. And if you talk about counter-wise, I think two stocks are there which looks very attractive to me. First is ITC, right now trading at 432. If you talk about daily chart, the way stock has been trading above its 50 days moving average, the trend is up, and we may see a further upside momentum in the counter from the present level. So one should get into the stock at the present level 430 downside. We will keep 420 as our SF. And if you talk about target wise, the first target comes at 440, and if stock breaks this level, then one way rally would be there up to the level of somewhere around 470. So first target is first counter is ITC, and second counter looks very attractive. It's a Grasim. The way stock has been trading on its daily chart, I think we may see a very good upside momentum. Yesterday, stock made a low of 2675, exactly where the 50 DMA comes. So, we may expect some kind of good bounce back in the counter. One can keep SL at 2650. Right now, stock is trading at 2740. If we talk about target wise, then first target comes at 2800. And if stock breaks this level, then further upside would be there up to the level of 2850. So, from my side, it's a Grasim and ITC.
Grasim and ITC, both earnings bound, and after that, betting big on these two stocks. Defense stocks are again higher in trade. You can see another 4% uptick on GRSC today. MTR Tech after the earnings is up by about 3 odd percent as well. You can see a bump up there. Astra Micro is up by about 1% as well. You're also looking at Premier Explosives. These stocks are also holding up. Again, earnings focus. HPL Electric amidst the broader markets is up by about 13%. You also have Centrum Electronics that's up by 13%. Some of those stocks from the broader markets that are ticking higher. Even MCure Pharma, about a 10% higher uptick that we can see. News flows there with generics division focus on that front. So that's something that we can also look at this point in time. Let's back to our conversation with Mayuresh and bring him in. Mayuresh, MCure, are you looking at that from the pharma space, expansion in the generics division?
No, sorry, Sakshi, I did not. I don't track this, so.
Okay, sure. Absolutely. Let's also look at some of the other stocks. Okay, we have to look at BSE. I think it's the record date for bonus, right? 2352 now for BSE. That's going to be important to watch out for. And Mayuresh, especially like, yesterday there was again a SEBI chairperson talking about that how they're looking at resolving the issues for NSE IPO. And of course, they're looking at it. So some kind of light being seen. But on the other hand, there was also the expectation that a consultation paper will be out talking about when the expiry can be done, because NSE has again put that application of Tuesday. So BSE was reacting onto that. But now the record date has come in, and now we have the fresh levels of 2352 on BSE at this point in time. How do you navigate through these fresh moves?
No, so again, Sakshi, I think only two platform players, right, as far as exchanges are concerned.
Yeah.
Yes, I think there was some element of doubt whether NSE gets Tuesday and BSE gets Thursday, and therefore I think a lot of confusion in terms of street gossip that was continuing. But ultimately, the regulator will decide what is happening where. But ultimately, the tailwinds still continue. A lot of demat additions expected to happen significantly. The annuity business for both exchanges expected to continue, growing at a decent pace as well. And obviously, the stock had run up, but there is no two ways about it. But at the end of the day, when the under-penetrated market like India, where demat account holders are still expected to grow significantly higher, where the need of a platform is still going to continue in terms of trade execution, in terms of the annuity business as far as corporates are concerned as well. I think the optionality is very less as far as markets are concerned. Obviously, I think I'm not making a case that you go out there and buy, but there is every possibility that both these exchanges might actually continue doing well, underpinning the entire growth story that India has to give, and the sheer under-penetration in terms of equity market and equity market investing as a cult, which will keep on improving at a decent pace over the next few years.
Okay, got that. Kunal, any suggestion on the capital markets related stories? What are you looking at?
Well, if we talk about this capital market stocks, I think MCX, BSE, CDSL, all are trading at sideways momentum only. I am not seeing any clear direction, particularly in this counter. So from my side, it's a way to watch. Yes, one stock should be there in your watch list. CDSL right now trading at 1457. If stock is sustaining above 1480, then we will get a breakout from flag formation, and afterwards we may see a very good upside momentum up to the level of 1600 to 1680. So as of now, please avoid BSE and MCX. Please have an eye on this CDSL. Breakout level would be 1480.
Okay, got that. So markets, I think, are picking up pace. You can actually see across the board, be it the frontline or the broader markets, they are improving in trade at this point in time. Time to look at some of the index contributors. So it's Infosys, ITC, Reliance, Grasim, Eternal also back, Trent, Kotak Mahindra Bank, that's supporting the sentiments at this point in time. Mayurish, to you, IT space is something that we have discussed quite a bit, but we were discussing in the pre-open what's happening with the US again. Looking at that, do you think again the question marks against IT will prolong?
No, so that's now getting gestated. So I think a large part of that
Okay.
has got gestated by what the IT index has exhibited. Now, there are only two things to look out for. One, obviously, in terms of order wins, how do orders probably come through? And at what periodicity of time do these orders come? Because typically, I think the period in terms of discretionary spending is expected to be the Jan and March quarter. That has clearly come behind us. What policies now get formulated in the next few weeks? I think that will largely determine how order flows will happen for the next fiscal or the end of the calendar year. And therefore, I think the cautiously optimistic commentaries that a lot of IT managements have probably given in terms of revenue growth in dollar terms, in terms of order wins, in terms of pricing, I think all that will come back to focus as we head into the second half of this calendar year. The second aspect, obviously, I think within large caps and small caps or mid caps, I think mid caps relatively had a better performance compared to large caps. Surely because of the orders wins that they already have on their books, the kind of orders that come through between $1 million and $10 million still keep on seeping in, rather than those huge multi-billion dollar orders. And except HCL Tech, which was outlier within the large cap IT space, I think a few stocks within the mid cap IT actually performed well, where I think the price correction or damage has not been too much, and in fact the valuations still remain a little bit on the higher side. But these stocks might actually continue doing well, both based in terms of management commentary and all the aspects we spoke about. So again, I think mid-cap IT, where I've been time and again harping, might actually continue doing well, Persistent, Coforge, emphasis are few stocks where we've always maintained our positive stance from a whole perspective. We still continue doing so. And looking at all the perspectives put in place, these stocks might actually continue reporting a better set of numbers as we head into the next few months.
Okay, fair point. Let's look at Kunal with you again. The defense names, this one is again taking higher, 0.8% higher for the index itself. And we're looking at GRSE at record highs again. MTA, Artec, we look at HL, PEL, Cochin, Mazagon, all of them are buzzing. We discussed this space with Mayuresh. But what's your take? If you have to pick technically, which is the stock that you will bet on even now after the momentum has already been generated and we've seen substantial spike?
Well, we have seen a very good upside momentum, particularly in this defense counter after this 6th of May. And I think it may continue further because the way all the stocks has been trading, all the stocks have been trading in an uncharted territory, making all-time high. So, further upside would be there. Now, from these counters, I think MTR Tech can do some murder for our investor, for our viewers. The way stock has been trading on its daily chart, one should get into the stock at present level. We have been witnessing some fresh breakout at level of 1700. Kind of stock is trading at 1720. Further upside would be there up to the level of 1822, and if stock breaks this level, then we may see good upside momentum even up to the level of 1980. So right now stock is trading at 1720. One should get into the stock with a strict stop loss of 1670. So MTR Tech looks very good.
MTR Tech looks very good at this point in time. Okay, we'll definitely focus on that. Mayuresh, before we have to let you go, could you help us understand at the fag end of the earnings, what has really stood out for you, and where have you probably added more positions, included more in clients' portfolios after the earnings have been reported?
I think BFS as a space, Sakshi has continued with a decent set of numbers. So whether they are banking large frontline banking stocks, mid-cap banking stocks, insurance companies have reported decent numbers, select NBFCs. So generally, the BFSI space has reported a decent set. And therefore, I think leadership stocks out of this space might continue doing well for all the tailwinds that they probably got. Outside that, I think hospitals as a space is something that we've continued to like, and I've discussed this time and again. Decent set of numbers across the space. The model is pretty simple now. They're adopting an asset-light model in terms of bed additions. Brownfield expansions are very, very cost effective because they entail minimal capex, and the ROCs are significantly higher for
Hmm.
brownfield expansions than whatever hospital companies are doing. So I think this is one space within healthcare that
Okay.
might actually keep on reporting better numbers. Agrochemicals as a space might actually continue doing well for monsoons, so on and so forth. A few defense names is something that we continue holding in our portfolios, but obviously we've added them at much lower levels. And consumer discretionary is something we are keeping a watch for. So we'll closely watch the next few weeks how Q1 numbers play out. But as I said, I think within the spaces, again, a few textile names, apparel makers, footwear players, selectively showing
Hmm.
earnings, resilience, and leadership traits is something that we kept on our list.
Okay, fair point. We'll take that down. Thank you so much, Marish. Always a pleasure to have you with us on the program, and may you have a fantastic weekend ahead. It's always good to have you on a Friday. The mood is better, and we do know that what's coming ahead is like 2 days of an off. And I hope you have a fantastic weekend. We'll see you soon in the next week.
You guys have a fantastic week. Sakshi, Kunal, have a fantastic weekend. And yes, I'll see you guys again next week. Thank you so much for
Thank
inviting me.
you so much. Appreciate your time. All right, Kunal, let's get down to some stock spotting. And of course, the first 15 minutes of a candle being formed, and it's not looking too bad 24,715. So, those who bought it, the dip yesterday, are in for some kind of a bounce. But the question is, will this sustain? Because now we're heading into another week, which will be the expiry week for the month as well. So, how are you looking to navigate all of that then?
Well, right now Nifty is trading at 24,700 and Nifty has taken the intermediate support of 24,500,
Hmm.
24,600. Uh, on a closing basis, if Nifty gives it close below 24,600, then we may see some kind of correction. But let's play for intraday. Right now trading at 24,713. I think this is the perfect time to get into the Nifty with SL of 24,500. Upper side the 24,813, and if Nifty breaks this level, then 25,900 would be there. 24,900 would be there. So let's play for intraday game only. Now, yes, definitely next week is for monthly expiry, so high volatility will be there. Overall, Nifty has to sustain about 25,000 for smart recovery and for good upside momentum up to the level of 25,500 to 26,000. Whereas if Nifty sustain below 24,600, then it may plunge further up to the level of 24,000 as well. So on a for positional level, I think one should keep an eye on 24,600. While for intraday, I think this is the time for taking intraday long position.
Okay, got that. Kunal, let's get back to understanding some stocks. Hunasa Consumer, I'll bring that to you. 12% higher after a long haul that we are seeing this stock really bump up in trade. Earnings have finally started to show some green shoots. Over the last 3 quarters, it was a dampener of sorts. But what exactly would you do with Hunasa after this move? Do you think most of the good news is already priced in and now entering will probably be something that will be more risky?
Yes, definitely. Entering at present level, it would be a more risky because right now stock is up by 13%. Is not only this, it made a low of 211 and right now trading at 310. So almost we have seen a 50% upside momentum in the counter. Now, I'm not suggesting to go for fresh long at present level, but yes, if you already positioned in this stock, then hold this stock. We may see a good upside momentum up to the level of 353, and afterwards even it may march towards the level of 400 level. So my recommendation is for those who are holding this stock, not for any fresh buy at present level.
Okay, got that. Let's take some of the other stocks also in focus. On the earnings front again, let me bring up for you, if we have to ask you specifically on, Sun Pharma, what do you do here vis-a-vis some of the other pharma stocks that have just started to take higher in a momentum? How would you play the pharma story?
Well, let's talk on the Sun Pharma first. Right now trading at 1660, down by 3.5%. Since last many days, Sun Pharma has been trading in a rectangle formation only, and downside Sun Pharma has a strong support at 1620, which is a lower band of this rectangle formation, and Sun Pharma is trading at 1663. So I think we may see some kind of bounce back in the counter from the present level up to the level of 1734, and if stocks sustain above this level, then even it may march towards the level of 1850. So this is the perfect time to get into the stock with the strict stop loss of 1620. Whereas if we talk about other pharma counters, Sun Pharma no doubt looks good. If you talk about other counters, then Cipla is right now trading at 1475. If you talk about its a daily chart, the way stock has been trading on its daily chart, I think even in Cipla we may see some kind of bounce back from the present level. Right now trading at 1476. Downside we will keep SL at 1450. If you talk about target wise, then first target comes at 1490, and if stock breaks this level, then one way upside momentum would be there up to the level of 1570. So both Sun Pharma and Cipla looks very attractive on a daily chart.
Fair point. So that's as far as the pharma space is concerned. We'll definitely keep an eye out on that. Let's also look at some of the other spaces. I wanted to actually discuss even the Adani stocks with you. Kunal, what are you really spotting here? We did see some momentum across the board yesterday. Many of the stocks are coming back in focus. Fundraise news coming in. There is action there. Is technically any stock looking all set to probably go higher from where they are?
Well, if we talk about Adani counter, then Adani Green, Adani Port, Adani Enterprise, I think amongst this counter, Adani Green looks very attractive because it has been trading upwards 50 days moving average, and further upside would be there based on the current chart structure. So one should keep an eye on the Adani Green rather to focus on other counters. Right now trading at 880. Recently it has taken the support of 50 days moving average. Not only this, trend is on upside only. So further upside would be there from the present level. Right now stock is trading at 880. We will keep SL at 850, and if you talk about target wise, the way stock has been trading upwards 50 days moving average, first target would be at 905, and afterwards even it may march towards the level of 940. So Adani Green looks very attractive amongst other Adani counters.
Okay, got that. So that's as far as the Adani stocks are concerned. We'll keep one eye on that for sure at this point in time. Okay, let's focus on some of the other aspects. The markets are actually poised to move up because you can see 300 point of an uptick on the Sensex, and the Nifty is also up and about. You can see 9 out of 12 shares, even on the Nifty bank, that are higher in trade. So things are looking up at this point in time. Not too bad. From the banking space, which we haven't touched thus far, what are you looking at? Private banks, PSU banks, or NBFCs? What is catching your attention right now?
Well, if we talk about banking wise, the way all the counters have been trading on a daily chart, I think one should keep an eye on Kotak Bank. We have been bullish on this particular counter since long. Right now Kotak Bank is trading at 2080, and further upside would be there in this Kotak counter because it has been trading in an uncharted territory near to all-time high. Volume-wise activity is also picking up with this counter. So one should keep an eye on this Kotak Bank. Right now trading at 2075. We will keep 2050 as our strict asset. And if you talk about target wise, then first target comes at 2100, and if stock breaks this level, then further upside would be there up to the level of 2125. So amongst private counters, I think Kotak Bank do some wonder for our viewers, and amongst other PSU counters, I think State Bank looks very attractive, trading above its 50 days moving average. Not only this, it has been continuously taking support of its upward rising trendline formation. Right now trading at 789. We will keep SL at 770. And if you talk about target wise, then we may see first target at 805, and if stock breaks this level, then 830 would be our ultimate target. So from the PSU, SBI looks very attractive, and from the private Kotak Bank looks very attractive.
Okay, fair point. That's the view that's coming in as well on the banking space. So we will definitely keep an eye out on that front as well. Let me also spot out for all of you to really see what's getting into momentum in the broader markets now. And we'll focus a bit on that aspect as well. Especially, let's look at the Nifty 500 index, which is up by half odd percent right now. Honasa, we've discussed, so 13% higher. MCure is moving up 10%. You have HEG, JBM Auto, Shipping Corporation of India. You know, these graphite players like Graphite India, HEG have also been coming back into focus from last couple of trading sessions. Then we have Clean Science, we have Finilex Cables, we have Electra, Green Tech also that's moving up about 3 odd percent in state as well. Names like TBO Tech, Zensar Tech, these are the ones that are buzzing in trade. Nifty 500, any stock that catches your attention? Maybe you can also talk about ATG and Graphite, Kunal. What's happening there?
Well, HEG up by 5%, and if it our graphite it's up by 4%. No doubt, we have been seeing a very good upside momentum in the counter since last 4 to 5 days. Further upside would be there in the counter from the present level. Right now, stock HEG is trading at 511 level. If we talk about SL wise, then one should keep an eye on this counter with strict stop loss of 475. No doubt, SL is at a little bit lower level, but nothing to worry about because stock has been trading about 50 days moving average. It has already taken the support of its previous bottom. So multiple equations are there which suggesting to go for long in this particular counter. We will keep SL at 475 right now. Stock is trading at 511. If you talk about upper side target, and first target comes at 540, and if stock breaks this level, then further upside would be there up to the level 585. So we can expect somewhere around 14 to 15 percentage of return from this counter at present level. And if you talk about graphite, the way stock has been trading on its daily chart, I think one should keep an eye on this stock. I'm not suggesting to go for fresh long because risk reward is not favorable at present level. But yes, if you have this stock in your position, then hold this stock. We may see a very good upside momentum up to the level of 575, and afterwards, even it may march towards the level of 650.
Okay, got that. We'll definitely keep an eye out on all of that. Markets are higher now. 24,750 is with us as far as the Nifty is concerned, 0.6% higher. Substantial move you can see. 47 stocks of the Nifty that are up and about in trade. So the momentum is broad based. The momentum is across sectors. The momentum is across broader markets as well. So you can see a bump up that's taking place. I also wanted to bring up Zomato. That's eternal for you. It's up by about 2% odd or so in trade today. Remember, the stock had been lagging for last couple of sessions. There's finally some uptick that's taking place. So let's focus on that as well. Eternal, 235 now, 3% higher. It's at the day's high now as we move closer to the first half an hour of the trading session. Kunal, any suggestion on Zomato right now? Out of woods, do you think one can again buy, or do you think again it's going to get stuck between, say, 240 or around those levels yet again?
Well, since last many days, stock has been trading in its range-bound momentum only between the range of 220 to 245 to 250. Right now, stock is trading at 235. Day before yesterday, it made a low of 224 exactly where 50 MA comes. So multiple supports are there in forms of lower band of rectangle formation. Not only this 50 MA. So timing we can go for creating a long position, particularly in this counter. Right now, stock is trading at 235. We will keep SL at 222, and if we talk about target wise, then first target comes first target comes at first target comes at 245, and if stock breaks this level, means if it gives a breakout of its rectangle formation, then further upside would be there up to the level of 261. So risk reward is in favor of creating a long position only. First target would be at 245, then 261. We will keep SL at 222.
Okay, fair point. I hope this has also answered your questions well as far as Zomato, Swiggy is concerned. Viewers, a lot of you keep on focusing on this space. Vis-a-vis Swiggy, how would you look at that one, Kunal?
Well, if you talk about Swiggy right now trading at 319 level, way below its 50 days moving average, and trend is downside only. So further downside would be there. If you talk about uptrend momentum, then Swiggy has to close above 333, then only we might see some kind of upside momentum in the counter. So 333 would be your alert. If stock close above this level, then only I suggest to go for long only.
Okay, got that. I hope this has also answered your question well. Let's look at some of the other, stocks. Let's look at BSE yet again. You know why it is important to focus on the stock is because it's, of course, X bonus. A lot of stock investors would have already got that bonus in their accounts today. And remember, what we have seen today is that you're looking at the price, which is bonus split adjusted. The stock of BSE has already risen by 30% so far in 2025. Okay, so it's again had a good run up towards the bonus listing that we've already seen. Now, for those companies' bonus issue, I just wanted to let you know that only those investors were eligible for bonus shares who would have bought the stock before the ex date, that was yesterday. So if you had the stock until yesterday, is what you will get the bonus issue with at this point in time. Now, that's something that you could definitely look at yet again in trade. 2361. Don't look at this 66% fall. It's only reflecting, the stock and split adjusted or bonus adjusted price. It's not down by 66%. It's in fact slightly higher, 2363 at the current levels as well. Kunal, would you advise buying BSE at the current levels after the bonus adjustment has come in? Or do you think usually we will see some pressure build up and then once things settle down after the recent run up is again when probably investors could look at the stock?
Well, I'm not suggesting to go for fresh buying at present level. Right now, trading at 2361. I have been seeing some negative divergence on a daily time frame, and not only this. Since last four trading session, it has been in a corrective mode only. So further downside would be there up to the level of 2200, 2100. Now, if stock approaches this level, then only I'll recommend it to go for long because this range would become a buying range and demand zone for the counter. So not at present level, but if any fall is there, if stock plunge up to the level of 2220 to 2100, then only I suggest to go for long counter.
Okay, fair point. So that's the view that's coming in. All right, first half an hour of the candle is out. Kunal, any key stocks or spaces that you would focus on for today?
Well, we have already suggested to go for long for intraday right now,
Yes.
trading at 24,773. I think
Right.
the way Nifty has been trading. We may see upside momentum up to the level of 2450. I think our first target has already been achieved, which we suggested. So not for fresh buy, but please hold the Nifty's long position for up to the level of 24,850. Now again, level will be the same for our positional trading 24,600 on a downside and 25,000 on an upper side.
Okay, fair point. I hope this has also helped all our viewers out get an insight as to how do you look at intraday levels. Now, we'll thank you then on that note for being with us on the show and helping us with an overall insight on the markets and specific sectors and stocks that you've guided us with as well. We'll start to wrap up the trade now and the morning edition of market today. We've actually started off on a very strong footing, built on it. 24,772, 0.6% higher in trade. Let's hope that this sustains. We're above 24,750, but whether we'll be able to decisively cross over 24,800 and of course beyond that is something that we will continue to watch out for. Beyond the Nifty Bank is up by a quarter odd percent, although tad bit lower than the frontline index. We also have among sectors, all of them are up and about, barring pharma, which is seeing some profits being taken off, healthcare also. But what is up and about in it is a percent uptick on FMCG, 1.3% higher for IT, 0.5% up for metals, autos up by half odd percent. You have real estate that's up by 0.9%, oil and gas by 0.8% as well. Those are the pockets that are hovering higher in trade. When we look at the mid caps and the small caps, mid caps are both of them are in fact, up by about 0.5%. India VIX is down by 1.4%, so at 17 odd levels. That's giving us some sense of a comfort despite the global volatility that we are seeing in the markets. Now, when we look at the top stocks, as far as the mid caps are concerned, you will see 0.5% higher for the index as a whole. Prestige, Hind Petro, you have Persistent, KPIT Tech from the mid cap IT space that's buzzing. Emphasis, Coforge is also buzzing in trade. You also have Nykaa that's coming up now in trade. TI Industries, that's another one that's also buzzing. Let's also look at pulling up some of the stocks from the small cap 100 index to see how the momentum is again in the broader index. Zensar Tech, TTML, PVR, Inox Delivery, these are some of the stocks that are buzzing. JBM Auto is buzzing in trade as well. So those are some pockets that are actually showing us some traction. Let me also look at also maybe some of the pockets from FMCG back. Of course, 1% higher has to be led by, ITC with the weights that it carries. Varun Beverages is up and about today. Tata Consumer Products, Dabur, Nestle, Godrej. So Nestle, despite getting that exit, is up by about 1%. So not too much of an impact on that front as well at this point in time. All right, viewers, we'll then wrap it up at that. Many thanks for joining in on the program with us. Do stay tuned throughout the course of the day. We have earnings conversations. We have daily calls at 12 noon that answers all your stock related queries. So stay tuned. And of course, all the news updates that will continue to follow. Remember, there's this RBI board meet as well that you need to track. We had also seen about a 2.5 lakh crore rupees budgeted amount in the finance bill that we got in February. But let's see what is the dividend payout that RBI gives to the government. That will be an added on benefit for the government and the expenses that they are incurring at this point in time to give them some more levers. So something that we will watch out for. And of course, all the global action that we will continue to keep an eye out on. Stay tuned on Business Today Television. Today is the last day for IPO Bell Price Industries. So keep an eye out on that as well. We'll continue to help you understand what's the GMP. In fact, it's moving up to about 24 odd points at this point in time. So let's look at all of this space. Thank you so much for watching it.